People across the country who purchase property from their indebted developers are refusing to repay loans on their unfinished apartments in a rare show of defiance. Purchasing real estate in China was once thought to be a safe investment. Real estate has now become a source of discontent and anger for the country's middle class rather than a source of wealth. Hundreds of thousands of Chinese homeowners are banding together and refusing to repay loans on unfinished properties in over 100 cities across China. One of the most widespread acts of public defiance in a country where even minor protests are suppressed. The boycotts are part of the fallout from China's deteriorating economy, which has been slowed by lockdowns, travel restrictions, and waning trust in the government. The country's economy is growing at its slowest rate in decades. Its factories are exporting less to the rest of the world, and its citizens are spending less at home. The government announced that youth unemployment had reached a new high. These financial setbacks are exacerbated by the problems of a particularly vulnerable sector: real estate. In July, homeowners in China's central Hunan province wrote to local officials, "Life is extremely difficult and we can no longer afford the monthly mortgage. Out of desperation, we must take risks and follow the path of a mortgage strike." The mortgage revolts have roiled the property market, still reeling from the effects of a decades-long housing bubble. It has also added unwelcome complications for President Xi Jinping, who is expected to win a third term as party leader later this year on a platform of social stability and continued Chinese prosperity. So far, the government has scrambled to limit the impact of the boycotts. The government's internet censors went into action after a flurry of mortgage strike notices went viral on social media. However, the strike's impact has already begun to spread. According to ANZ research, the boycotts could affect about $222 billion in home loans on bank balance sheets, or about 4% of all outstanding mortgages. Any momentum behind the mortgage strikes would add to the Chinese Communist Party's growing list of economic problems. When a rural bank in Henan province, central China, froze withdrawals, it sparked a violent clash between depositors and security forces. With youth unemployment at 20%, recent college graduates are having difficulty in finding work. Small businesses, which employ the majority of people, are struggling to stay open in the face of disease-19 lockdowns. Chinese Premier Li Keqiang paid a visit to the southern technology hub city of Shenzhen, urging a heightened sense of urgency for economic recovery. However, the property industry represents a unique set of challenges. Real estate drives about one-third of China's economic activity. By some estimates, and housing accounts for about 70% of household wealth, making it the most important investment for most Chinese people. In 2020, to address concerns about an overheating property market in which homeowners would often buy apartments before they were built, China started to crack down on excessive borrowing by developers. Many businesses that had relied on easy access to debt to keep construction projects running were hit hard by the change. As financial pressure mounted, Evergrande and other large property developers went bankrupt, with repercussions felt throughout the industry. Hundreds of companies that provide services and supplies to the property sector, such as construction firms and landscapers, issued a joint statement to government officials last month, saying that they were facing a survival crisis because they hadn't been paid for months. If the developers do not complete the construction, all owners will be forced to stop repaying the loans at the end of August, they wrote. One of the homeowners who signed the notice was Andy Mi. Mr. Mi first purchased a $150,000 apartment in the development in 2019. After making monthly mortgage payments for 3 years, he learned in February that the apartment wouldn't be completed in May as promised. In fact, all construction had stopped. The Yufa Group, the developer, told the homeowners that the handover had to be delayed until December. "We don't even know what happened to the money. How come there's no money?" Mr. Mi said. "We will definitely stop paying the mortgage if there are truly no other ways." The Yufa Group was unavailable for comment immediately, and a phone call went unanswered. The Zhangzhou municipal government has stated that it will establish a bailout fund to provide capital to struggling developers. The Politburo, China's top ruling body, stated last month that local governments should ensure that unfinished buildings are completed. However, Michael Pettis, a finance professor at Peking University, believes the mortgage boycotts are part of a larger problem: the bursting of a decade-long Chinese housing bubble. Even if Chinese authorities provide enough capital to developers, the underlying homes are still overpriced, he claims. There has been a lot of fictitious wealth created by rising real estate prices that is simply not justified, Mr. Pettis said. Those are simply band-aid solutions to make things better in the short term. So for many years, property developers did not have to worry about funding. Credit was readily available and approximately 90% of new homes were pre-sold. Buyers would make deposits and mortgage payments before construction was finished, which obviously was a big mistake. That system provided developers with the money they needed to keep building, and until recently, homeowners didn't complain, since the expectation was that property values in China would continue to rise, as they had for decades. But times have changed. According to data from China Real Estate Information Corporation, sales for China's 100 largest property developers fell 50% in the first half of 2022. Mr. Mi, 28, who works in hotel management, recalls a time when the market appeared to be much more promising. When he first purchased his apartment, he put down 30% of the purchase price from his parents' retirement funds. Despite the fact that he lives in Beijing, he believed that the property in Zhengzhou, which is surrounded by parks and schools, would be a good first step in his plan to return to his hometown and start a family with his wife. Those plans are now on hold as construction at the Zhengzhou development remains halted. Mr. Mi and other homeowners intend to carry out the boycott if the situation does not improve. He said in their letter, the homeowners acknowledged the risks. Infractions, such as failure to repay loans, are punished in China's social credit system by limiting an individual's ability to travel, enroll their children in school, or borrow from banks in the future. However, in the notice issued last month, the homeowners stated that those risks outweighed a threat to their survival. "When we were desperate," they wrote, "the credit system becomes a paper tiger for us, a shackle that can be thrown away at any time." And that's it for the video. Thanks for watching. Check out those videos. Bye.